All right, hey traders, TG Watkins here. Let's see if we got everything up and running. Let's put a little show on back there, brighten things up a little bit. I hope everybody is doing well. And let's see if you guys are new to me and the Moxie indicator. Always got ready for sale if you guys are interested in picking it up. And we have a $7 trial for 30 days for the Moxie indicator trading room. And it's been pretty busy lately. The market is really doing quite well. So it's very interesting to be watching this and to see just how far the markets are pushing. And underneath the surface, there are a lot of good things that seem to be happening. It kind of looks a little bit like 2020, and it feels like just a more normal market to where we have some strong bullishness out there. So it's great to be seeing this. I'm pretty happy about it, and we're just seeing things that are starting to work. It's just great to be experiencing this again, to where we can actually see this stuff, all over again. Oops, didn't want that. There we go. Let's try that. All right, so we'll dive into some of the charts and kind of show you guys what's going on overall. I mean, look at this. This has been a serious move for the S&P. We talk about kind of the macro things, what's going on out there. It's been, I think we have the FOMC next week on Wednesday. Even if they raise 25 basis points, I think that the market seems to be factoring that in already, pricing it in already. The idea of a soft landing is warming up, so we'll see. And for all those people that think that we're about to roll over and die and crash, it just doesn't seem that way. At least the market doesn't think that's what's going to happen. And the possibility of it happening sometime later, sure. Maybe it's going to take a while. Maybe it's going to take a while for all these interest rate hikes to really catch up to the market and stuff like that. It's gonna be interesting whenever all this happens. Uh, let's see. So brighter side, interesting that you were able to jump in here early and actually leave some comments. But cool. Yeah, we'll go through some of those names. And let's see, B1, a couple of months ago, I mentioned, since you're talking about me, that we need to start worrying when the yield curve starts turning up on daily chart. 10-year and 3-month has based with higher highs, higher lows. Moxie moving average rising. Okay, Elf Shoe seems like it wants to start engaging with a rising 50. There may be a trampoline and double bottom developing on the 10 2-year. What do you think? I need to see a particular chart of that. I know if we go to the Fred website, we can see that. I haven't looked at it in a while, and part of what we talked about, there were two things. One, it wasn't just about the yield curve being inverted. It was when it uninverts, and that doesn't just mean like, okay, it's stopped going down and starting to angle up. It means that it's actually getting above zero. So when we go to those websites and we look back at history, the recession thing seems to happen at least when the yield curve inversion crosses or uninverts, so crosses back positively over zero. And again, it's kind of an indicator. It seems to be correct 100% of the time, but the timing of that is, I think, what's different. So that is something to watch. The market and the economy don't seem to be too concerned about that right now, and so I think that's where we're going. And all I think we can do is keep watching. In fact, there's another uh, semi-professional trader that I'm really good friends with him. I've known him actually since I was, well, probably 13 years old or something. And he's done really well for himself. And so I like to see what he's up to. And he's been talking about the yield curve as well. And he's like, oh, when the recession. And then actually just a couple months ago, he said, well, maybe we have to kind of stop talking about the recession thing, because even though all the future indicators say that at some point there should be a recession, it's just not happening right now. And I think that is the thing that is a little surprising. I think that took a lot of people by surprise. And I think that we need to be aware of it. But, things are basically looking around and saying it's not happening yet. And so that's kind of all I can say about that. B1, as far as the charts you were talking about, can you get me a ticker of some of the ones you were looking at if I can enter that into Thinkorswim? Otherwise, at some point, I'll have to go to the Fred website and just see what the yield curve looks like from there. Coming up here, I got to say, this market is very, very strong, very hot, which is fine. We've been playing quite a few names, but we can see now, again, we are getting up and over that daily 30 TR, and it can stay up there for a while. And I think if we look at the Nasdaq, you can definitely see that it can stay up there for a little while, but it does like to do some pullbacks, right and through there when it gets up there. You can even see here and here. So yes, we're in a very strong market, but we need to be careful about timing and when we're going to be, careful about those pullbacks, the ebbing and flowing, all that kind of stuff. And then if we come over to, let's see, on the SPY, try that again. We can see that the SPY is starting to get to its weekly 30 ATR, which again, it can ride it. It can kind of stay along that 30 ATR, but a lot of times when it gets up and over, it does indicate that it's a little bit too hot, a little bit overbought, and just kind of be prepared that it might want to come back down a little bit or flag a little bit. We can kind of see an example of that here on the monthly chart. You can see SPY was running the third ATR even on the monthly time frame. So just be aware of that. That in through there, there can be big pullbacks. And I think that overall, though, the market's just it is looking good. It's looking really strong. There are a lot of names that look like they want to be taken off, and we can kind of dive into a few of those as well. And I even think I saw. Let's look at the UVXY. I just have not been looking at this thing because it hasn't been doing anything because the markets just keep going up. Yeah, the only thing I've kind of mentioned about this before is that it looks like it could be trying to find some support in here and it could be a trampoline move. And we are starting to see some divergence here on the 15. But again, it hasn't really done anything yet. So I'm watching it. And even if it does pop, seems to me that the pop would kind of help refresh the market. I mean, we know that the internals, and let me bring you this up. Let's see. Let's see over here. Let me get my well, let's see. I think this will work. Yeah, here we go. And then I can copy this and we can put it up here. And the thing that I've been seeing about this with the breadth internals is that we are just very high. We are up here at about 0.82. So 82% of stocks in the S&P are over their 50-day SMA. And you can just see from the line that I've drawn that the market doesn't tend to stay up there for too long. It can hold a little bit, and so that's maybe what we're seeing. But just be aware we are kind of at the upper ranges of the market. Uh, but clearly, yeah, things are still strong. Things are going. So even here, you look back even on a weekly time frame, you can see just how it gets up there for a while, but that's kind of an upper limit, and then we tend to see some fairly sharp pullbacks after that. So I don't see anything yet. Market's still going up, but it's something we need to kind of just keep in the back of our mind. All right, let's see. I think that kind of does it for the internals. We have FOMC next week. Maybe that'll be a trigger, buy the rumor, sell the news type situation. But we'll have to check. And then, so Nick, let's look at Chewy. And yeah, a lot of these names, I've been looking at this. They look fairly constructive. Now, as far as something like Chewy, I hesitate to want to get it right here, right now. And I think that's more of a, what's going on with the market type situation because the market has been going up quite a bit, but Chewy hasn't really done anything yet, has it? Now, it looks good. Like it looks like it wants to, it's popped up. It looks like it's flagging into the daily 50 and all that. The structure looks good. But I wonder, is it going to play catch up? Or is it going to be able to go up when the market wants to take a breather? Like if the market is closer to taking a rest than rather to be able to keep pushing because it is pretty high, then when is this thing going to go and fire up and do its own thing? So that's kind of the mindset that I have when I see something like this, is to try to bring in some context about the market. Like market's already up big. A lot of names are up big. This one's not doing much. So will it go do its own thing, or will it continue to meander when the market weakens a little bit, and then you'll have to wait for the next round? I'm not entirely sure about that, but yeah, it looks good. You got squeezes, you got big squeezes here. Maybe you got a 50, 250 going on over there, and then I would see if price can basically stay above the uptrending daily 50. And then DOCU. Oh, and so was it Sachs? Goldman Sachs gave a $50 buy target with Chewy. Well, that would seem reasonable. $50. I mean, that's right up at the previous high. In fact, $50 looks like where the weekly 200 is starting to come in. So, sure, I think that seems like a pretty easy trade that if Chewy is going to go from here to here, that makes a lot of sense. It's just a question of will it go and when will it go? But the target makes sense. The target totally seems very, very reasonable. All right, then Docu, same thing. We've been talking about a lot of these stocks that they are done going down, which is good because that's the first step to recovery is to stop going down. And then the real question is when do they start going up? And in this situation, it looks a lot like the ARK ETF, and where price could not get past moving averages, and then finally was able to get over it, and then kind of do some stuff and move up. So, from a risk to reward standpoint, I think that a lot of these stocks have low risk because it seems to me that they're pretty much done going down and the market is going up. And so, we do have a rising tide that should lift all boats and we have the wind at our backs for stuff like this. But, they're just when are they going to move? And if it hasn't moved yet, is it going to be a good mover? That's kind of the thing you have to balance. And we don't really know that answer. You just have to try it and see if it starts working out. And if it fails, get out. And let's see, base. I've not heard of this one. Let's see. I guess it's got okay volume, about 600,000 shares traded per day. And this is, I suppose, a little bit of what I'm talking about when you see stocks that kind of don't do much for a little while and then they do finally have a move. This one, Nick, was pretty clear as to where you should get out. I really like to start lightening up my position when I get to that third ATR. Now, it looks like news. I'm not sure if it's earnings. It looks like just well, maybe it was. Yeah, it looks like it was earnings. Go figure. Buy the rumor, sell the news, maybe. And come in there, and then look. You see the elf shoe? Man, that's a good elf shoe right there. Look at that. You got the leg, you got the heel, you got the arch of the foot, ball of the foot. Boom. There's your elf toe. So yeah, that looks great. That elf shoe, it's a clean one. And if you look over here on the hourly chart, what else we got? There's your double bottom. There's your positive divergence, and there's your Moxie price trigger right on time. Right on time. And then you could see right there, it came back down to test the hourly 50, and that looks nice. So let me make a note on that one. I'll have to watch it. I don't know anything about it. All right, and let's see. Stitch Fix. Yeah, same kind of deal. I think these names are done going down. The question is, how exciting will they be to the upside? The potential's there. What's the how much short interest does Stitch Fix have? Let me come over here and take a look at it on my side. Let's see how much short interest on Stitch Fix. About 13%. Yeah, that's healthy. That might get you going someplace. And then if you look at the weekly chart, there are two things that I see. Number one, you see this overall large double bottom. So again, I think the low is pretty much in for a lot of these stocks. And then another near term, you can see leg, heel, arch of the foot, ball of the foot, and potential elf toe. Again, like Docu and like ARC, you can see here how price has been getting held back by the weekly 50. And you know what? Maybe when it's finally able to break past the weekly 50, then maybe it can actually have a move. But that's kind of the thing. It's still working on trying to get itself going. And there are other names that have already done that. And they are more mature, more developed, and are really going someplace. But yeah, I can't argue this. It looks good. It definitely looks like it has potential. The question is, where will it go? Right. And then WDC. Yep, same kind of thing. Most stocks are starting to look pretty good. And yeah, look at that. Let's see, get back there. Yeah, on the weekly time frame, look at that. It's starting to get past the weekly 50. The weekly 8 is over the 21. It's using the weekly 30. The Moxie indicator is about to fire. Right here, you're over the monthly 10. In fact, the monthly 10 is now angled up. And yeah, what do we got here? Essentially, we have a 50, 200, 50 maneuver. Let's see, that was a pullback right there. There's your positive divergence. Yeah, gosh, look at this. Even on the hourly chart, what do we have? 50, 250 with a trampoline and a pullback to the daily 50. Yeah, WTDC is pretty clean. It's got a lot of the stuff there. So I have that one on my list, but I'll make a special note of that one as well. And the whole technology thing seems to be doing well. I call it probably AI related or computing, because there's a lot of stuff. And if you want to see something, QBTS, I forget who mentioned this one to me. This one is a pretty crazy stock. So be aware if you're going to get into something like this. Just understand it's going to be a little bit nutty, but that it could be big risk, big reward. And if we look at QBTS, look at this thing. Doesn't that look like it's totally changed? And this is the whole point of what I've been seeing in the markets lately, is that a lot of stocks over 2021 and 2022 have really just gotten hammered. They've been going down. They've been in a bear market. And then what we notice is they stop going down and then they start moving up. And then you just have to trade them as normal stocks. Like, this is why I'm saying it feels like we're in a pretty good market, and it feels like we're actually in a normal market, because a lot of things are starting to trend in the upward direction and doing fairly well. Look at QBTS. Look at it running into its daily 200, and then it finally breaks out past its daily 200. Like, it doesn't get much cleaner than that. That looks really, really amazing. And then if you even look over here, as far as the Moxie indicator goes, those of you in the Moxie room, you just saw that I posted about AI. And I said that first move up on AI was a inverse trampoline move. And it just means don't buy right now. Don't go long right now. Do you notice right here, QBTS had the same setup, right? So, gosh, I got to make a note of this because I want to show you guys this when I am in the options room next with you. So QBTS with AI. I will talk to you guys a little bit more in depth about that and how that looks and how that works and why we took that trade. And then you can see here a little bit of a dip, and there's your positive divergence. There's your Moxie price trigger and a test of the hourly 50, and up goes QBTS. So yeah, we continue to see a lot of good stuff out there. And WWDC was the idea for that. And then Nick, as far as Chegg, yeah, I don't know. It's still, maybe that's the bottom, but boy, it's got a lot of work to do. I mean, talk about a laggard, talk about something that's not really developed and kind of underdeveloped. Yeah, I'm not sure I'd be wanting to play with that yet. You might be right. This could be the absolute low, but I'm just not sure I'm interested in, trying something like that. So I'd move on. And same thing with Space. Space has a lot of bad things going on. They're trying to find a buyer. I think they have bankruptcy. They've got a lot of stuff. So I just, as John says, I wouldn't touch that with a 10-foot pole. So there's just no need to go there. You see a snake over there, you don't need to go pick it up. And I kind of think that's what's happening with Space, which is too bad. I think the company's neat. It's fun. We also made a bunch of money on this thing back in 2020. I mean, look how many times we were trading this. I mean, that was wild. Look at that. Those are all the marks and all the trades that we took back in 2020. So yeah, it was great. That was a fantastic one. And then look, a perfect double top. What was the top of the market? Boom, right there. A double top. And look at the amount of volume that came in there. And then it was all done and over. All kaputs. And then let's see, last one, GRWG. And yeah, isn't this is cannabis, right? Yeah, grower generation. Nick, are you familiar with Scott's Miracle Grow, SMG? Because that one looks interesting. Yeah. Again, look at these stocks. What's happening? They're done going down. This is why. And let me just throw this up there for anybody who hasn't seen it. Right here. So I guess the title of this changed. This was the market update that I put out on the 13th of June, something like that. Let me play it and we'll see. So this was June 13th, and I said generational opportunity. Many tickers are at their all-time lows. And this is kind of what I'm seeing, that we have just gone through a 2-year bear market, and it's like burning down a forest, and you put all the ashes and all the nutrients and everything got burned down, and now everything has to regrow. And we're going to start seeing green shoots and brand new leaders and big names. And basically, where else does anything have to go? everything literally just got burned down. So if you guys want to see what I was saying in this webinar, I think you guys should come check it out. Go to Profit Pilot's YouTube page, and you can find that. You can go to Simpler Trading. You can look at my name and this kind of stuff. And yeah, June 13th was when this thing was posted. So anyway, that's kind of my point. Is like, look at this. This thing absolutely got burned down. Of course, it was a bubble. You want to see what a bubble in the market looks like? Boom, right there. There's your bubble. And so at this point, yes, look at that. I think it's done going down. Now the question, and I keep saying this because we just don't know. The question is going to be, okay, so they're done going down. But does this actually become a winner? Is this going to be a strong stock? Or is it just found in equilibrium where buyers and sellers are okay with it, and short sellers have said, well, we think this is a legitimate price for it, but it may never go anywhere. Maybe it has a couple pops here and there, but what if it never actually goes anyplace? And that's the risk we take with trying to play something like this is, okay, it's done going down. But what if it doesn't really go up? What if it turns out to be, like space, where it just kind of doesn't do anything? Even though the indicators are saying, okay, and even though it kind of gets on top of the moving averages, it might still end up going nowhere. And that's just the one thing that we have to be prepared about with these names. We need to pick winners. Kevin, good to see you. Lakeland, Florida, cool. And let's see, how can I? Oops. Oh, that's how she does it. Okay, interesting. Let me see if I can type that in. UST10Y dash US03M. Yeah, I figured that. Why was that gonna? What did I do wrong? Yeah, I'm wondering. Sometimes Thinkorswim doesn't like. Yeah, on TradingView. Okay, you don't know about Thinkorswim. Gotcha. Yep, that was the problem. Okay, I will have to look those up on my own and see where they are at currently. And then I'll also kind of look at the Fred website and see what the yield curve looks like. I know a lot of people have been talking about it. The thing that I have watched on Thinkorswim is this one, the TLT, the 10-year Treasury. And I think, what we're looking at when we come to this is, what does the market think about interest rates? The market was definitely ahead of the Fed. The market started to raise interest rates uh, all the way towards the end of 2020. Before the Fed was even thinking about doing it, right? That kind of funny thing. Oh, we're thinking about raising interest rates. Man, talk about some word soup and word play. So anyway, the market generally knows all, and it knows best. And we can see that it reached a level up here, and it kind of said, okay, we think that's about right. And I, for several weeks at this point, have basically said, I think that this is going to stay here. Because if you think about what the narrative is, and you think about what the market is trying to do and convey, and what the Fed has basically said is, we're going to raise interest rates. Okay. And we're going to get to a point, and, we're going to be higher for longer. Maybe we'll back off eventually. But really, I think just getting to a new normal, or really the old normal. I mean, having actual interest rates, we were in a zero interest rate environment for a long time. And right now we're just actually kind of coming back to what's considered normal, 4, 5, 6, even 7% interest rates. That's normal. And the market and the economy is just going to have to adapt to that. Even if the Fed does back off a little bit, we're still going to be probably, high fours. And I think that that's what the market's looking at. So I've been saying for weeks that I really think that this is mostly just going to keep going sideways, and it might tick down a little bit, when we need to kind of unwind a bit. But that's kind of what I'm seeing in through here, and I think that's proven itself. It's just kind of not really going anywhere. All right, and then we'll kind of finish up on this. So DB, let's look at Etsy. And yeah, well, guys, this is all looking very similar, isn't it? You look at Etsy, and what do we got? We have a giant double bottom. And you can see that I've had a line drawn in there for quite some time. So DB, if you're looking at this, same thing I was talking about to brighter side is, if you look here, leg, heel, arch of the foot, ball of the foot, we might be working on the elf toe in through there. But essentially, you've got this overall double bottom, and then you also have a near term double bottom. You also have positive divergence. And in fact, if you look on a weekly basis, this was an inverse trampoline move. I mean, the Moxie indicator and the Moxie rules perfectly called that. So that was a great situation right there, that inverse trampoline move. So then we come over here, and yeah, I see what you're seeing. Yeah, it sure looks like it's got potential. Look at this. There's your double bottom. There's your positive divergence. There's your Moxie price trigger. It's flagging right into the hourly 50. Here's your Moxie price trigger also. It's basically a perfect setup. So all we can do, because we can't predict the future, all we can do is we can take setups, and that is the name of the game. If you see a setup and it looks good and it fits all of your rules, then you take it. What happens next is up to the market, and that's why we take swings. And if they're a strike, so what? If they're a hit, great. They could be a home run. You kind of never know what's under each rock, and so something like Etsy, or to a brighter side's point, you're looking at Stitch Fix or something. If the setup is there, take it and then see how it works. Some of them will be big winners, some of them will be small winners, and some of them won't work. And some of them, I guess, will just go sideways. So sure, yeah, Etsy. Etsy's got all the stuff. It looks pretty good. Joe. Okay, so Toast. Yeah, pretty big move down. I guess I was a little bit early on that drop, and yeah, that seems like a big volume drop. So normally, you can see here we had price running up into that third ATR, and I was expecting some sort of pullback. So we got that pullback today. As I said, I guess I got in a little too early, but we're pretty darn oversold. We are way, way, way outside of that third ATR, and we're right back into this trading range. In fact, we're right back to the daily 50 on big volume. So to remove the 99 cents order processing fee from online ordering channels, removing that fee, does that mean that Toast would get less money, less revenue because that 99 cents processing fee doesn't get charged for them? If that's the case, then we'll have to see if they can recover from it, because we've also seen that sometimes bad news or drops. Like, look at this. Whatever happened on Toast for earnings sounds like bad news, right? And it went down for a while, but then look, it recovered and had a really, really pretty solid move. So I would just kind of look at that and say, well, we're gonna have to see if it can absorb it. Can it continue on with its business model? Is it just kind of like a bad news situation, and the algos pick it up and they're just selling it? We'll have to see how this actually turns out. But if we look at unit and you look at these drops, this, I think it could end up being a good buying opportunity. I mean, look at unit. We had a couple day drop, pretty big, really far outside of that third ATR, and then this thing completely rebounded. So that's why I'm looking at it. And then INVZ, and you can see in through here, at a pretty healthy pullback right there to the 21, but you can see here also third ATR, and then rebounded nicely. So that's kind of why I'm looking at Toast. And yeah, I didn't catch it super right this morning. Could have waited, could have gotten a better fill, but it seems very similar to those other buy the dip type situations. So that's kind of what we're looking at. Let's see. The company also stated that the removal of the fee will not have any impact on its previously announced guidance for fiscal year 2023. So there you go. That could help balance it. Right now, they're just selling based on the news, and maybe once cooler heads prevail, this could actually end up being a buy the dip opportunity. So we put a little bit more on this morning, and if this thing starts to turn around like we saw on INVZ and UNIT, then we can add more as soon as it starts to find its footing and catch up again. But overall, I like what's going on here. I mean, you look at the higher time frame, this thing, just like Brighter Side and DB and I were talking about, it sure looks like it's done going down, and it looks like it's in an uptrend. But from a technical standpoint, it looks like it just got a little overbought. So that's why I was looking to add to it. And I think I will continue to look to add to it. We just want to see if it actually turns. So, all right, guys, I hope you had a good time out there. This market's doing well, so it's been kind of a fun market. We just have to be a little bit careful whenever the market finally says we're overdone, and we need to pull back more seriously. Just be prepared for that, and we'll see what we can do in the meantime. All right, guys. Thanks. And for those in the Moxie room, we will see you in the options room in just a little bit. Also in Moxie, I'll do a broadcast for you. All right, guys. Thanks again. Catch you later.